Hello and good day, folks. JJ Edwards here with another tape reading. Let's look at our daily statistics first. Okay, here we go. We have our statistics. Today is April 20. So during lunch session, I had a few trades. 4 trades, 100% success with 2100. I will show you those trades on the chart. We are entering the PM session. So let's go. Here we go in the chart. During at this time at 10:51 before 11 a.m. we had this massive sell-off that left a gap, and then we had 1 2 3 4 5 bearish candles which were inverted or broke the structure on this candle with the fair value gap. I went long here and closed all the way partially inside this gap. We have the point of control with 1000 contracts at 26,660. And most importantly, if I go to 5 minutes chart, we are at this VWAP anchored from this low. It's the second time this week that the price is entering or testing this VWAP. That's why I'm bullish, at least for short term on NASDAQ. PM session will start in 10 minutes. Once the PM session starts, I will look for the first gap, first liquidity void, and the candlestick patterns. I will look at the bodies, the tails, and then we will decide if we should wait for a bullish setup or a bearish setup. Currently, we are below the gap from here. We took a liquidity. We have another liquidity down below. If I enter the mean threshold of this gap, I can join one tiny bearish leg to sweep these liquidities and perhaps tap into again to the just 26,660. So let's wait for the price to enter the mean threshold. Stop will be above here, targeting this low. Let's start with 2 contracts right in the mean threshold. Order place. Right here. Order place. Once my order is active, I will move the stop to that high and then target these equal lows. We can look at the cumulative volume delta. It's consolidating, so we are at a very boring market. That's why I did not publish these trades during the launch session. It's for more advanced strategies, which we will get to it. We are only in we are less than 10 episodes into volume profile and VWAP trading with price action, so we will get into those strategies as well. That trade is now active. Let's move this stop at this high, which is around 520 bucks, and for the TP 870, let's make it $1,000, slightly below these lows. I hope it can tail into this point of control. I am relying on the 13 p.m. or 1 p.m. candle. Usually it does result in a liquidity sweep. Over here at 12:42 p.m. we have done a damage with this tail in here. This tail, I'm talking about this candle. This tail run on a liquidity. The next one are these equal lows, which is slightly above this gap. 500 bucks at risk to make $1,000. Let's go. The structure is still bullish. As I explained, here we have a new low, 5 consecutive bearish candles. This high should have stayed open, but inverted here with a gap. The price returned to this area twice. The point of control shift to the lows. So I do expect one liquidity sweep, perhaps below this low, before it goes higher. However, that might take 30 minutes to 45 minutes. For now, I will scalp and then I will wait for the major liquidity sweep. After that sweep is done, we can participate in the market. The 1 p.m. candle can be choppy, have both side tails, because new participants will enter the market. It might take my stop without taking my profit. So It's a risky trade. It can take the stop and then take my profit, or it can sweep the lows and then invalidate this high. Since we already did the damage on this doji candle, I am positive that the next sweep is below these equal lows. I won't be scared if the price rise a bit higher and do that. As you can see here on this candle, the price tailed into the gap between the low of this green candle that is stretched all the way to the high of this green candle. It's doing it again here. But I like to see tails or a longer wick. I don't want to see the price goes all the way into or close inside this gap, this bullish candle. Because if these bulls are trapped, their stops could be below these lows. We are hunting their stops. That's good. It's tailing. You see that? We have a tail. So I expect at 1 p.m. the price would exceed the lower band, the same way it exceeded the higher band in here, and sweep these lows. Almost there, just a few more dollars. The trade is closed in profit right here by 2 lots. So I sold 2 contracts here, NASDAQ at 26,687 and a half, and closed it here. Got 2 contracts at 1302, right at the PM session. Now look at this. As I mentioned, at 13, it can do both. It can go high, take this one, and also take this low. Since it already did the damage in here, it was time for the price to damage here. Now we have this tail that exceeded the lower band. Since we're consolidating and I don't see any major participant, when I look at the cumulative volume delta, I can use the lower band of the Bollinger to again target these highs, because high and that high, they are very equal. So it's very fragile and the price can potentially go and take them. So I want to enter 2 contracts here. Maybe I also can measure this tail or use the same lows, because liquidity rests at the lows. That's why we have tail. This tail is because there is liquidity at the lows. Those liquidities are in form of buy limits. I can adjust this trade even better to have a better position. It was very sudden move to the upside. That sudden move to the upside could indicate there might be some sort of leftover pending orders, so the price can potentially return again into this tail, fill a few more orders, and then target this high. So let's wait for the price to return to 26,669. That order is active. We are in at 26,669. As for the stop, we swept this liquidity. They have a gap in here. So as for the stop, I can move it at the point of control. This is a very risky stop loss. It's too tight. But in a situation like this, the price can all the way go and take the liquidity below this candle and this fair value gap. It's because when we have 1,000 contracts at the lows, NASDAQ tends to have one manipulative move and rip lower to take sell side liquidity. That's why my stop is smaller. If it takes my stop, I still will have another opportunity to plan long. As for the profit, we are very close to 26,710 after this high. So I want to target here. And this target is also in conjunction with this gap. So let's have that on our chart as well. Yep, the high is very close to this. Even the mean threshold can be a legit target. That's a good risk to reward. I'm monitoring the upper band of the Bollinger. If it exceeds way too much, I might exit these trades manually. I want to see how the price reacts or manage these down close candles. If I see these down close candles are being taken with ease, I might add to my position because my entry is in a good place. My target is not that high. So perhaps I can add to my positions because I am confident in this trade. We have breakup structure, return to this area. We are backed by the point of control with 1,000 contracts. We have this gap that we haven't traded yet, only here. Big sell-off. So I'm more confident now that the price can potentially get back to that same fair value gap. So if I see this candle or the next one closes above this bearish candle, I will utilize the same bearish candle to add to my long positions. That sell-off is too strong. This candle is supposed to be bullish, but it's not. I don't care about the tail, but let's see the chain of the candles, how it reacts to it after a bit. We are about to invert these two red candles. That's actually good news. See a close above it. If it does, maybe I can use the mean threshold to enter another trade, the mean threshold. So these two red candles, these sellers are trapped now. There's a high probability for them to stay trapped until their stops are taken above these highs. Here I can move my stop a bit higher, perhaps to the lower band of the Bollinger, decrease the risk to $200. The target's still something around 17 to 1800 bucks. It's going with the speed, it doesn't give me entry. Okay, let's look at the order flow. 10, 19, 14 contracts. I want to see these 49 sell contracts. Can they get anywhere? Can they close it bearish, or it's still gonna close in green? Very equal highs. If it closed green, I would like to use perhaps the high of this bearish candle to enter a trade. A bit higher. Do I get a fill? Let's remove the order flow because I cannot see the chart. All right, that's a fill. Now, let's since I am 30 contracts in, I would like to close all of them at this high and not risk more. But the market still looks a bit exhausted. I don't see sudden moves. It's after PM. We have 1,000 contracts in here. And this uptick in momentum, which might enter into this fair value gap, could be just trapping new buyers, engineering liquidity. The structure that the price is moving alongside the upper band, that shows new bulls came into the market. I guess you can also see that in the order flow. Now we are having a trend that will lead into the price to tap above this high. Now it's serious because the Bollinger Bands are widening. It's moving above it. That's a trend. That's at least a short-term trend. And the result of this bullish move is taking these highs. Now I can move my stop with confidence below these two bearish candles, because these two bearish candles are trapped. Also, this bearish candle, I can move it below this. This one is also trapped. So all these stop losses rest above this high. So let's secure more of the profit by moving this stop a bit higher. Let's secure $700. $700 is secured. Let's get partially at this high. I don't like that bearish candle in that area. I don't like this bearish candle. It shouldn't have been done here. The price should have gone from here with speed and take that high. Once we have this run, it should have simply resumed. I want to move my stop below this bearish candle, secure 1,270 bucks, securing 1,347. The profit is almost $2,300. I hope it can go ahead and take it. Just a few more ticks away. I want to move my stop a bit even higher, $1,500. I don't want to risk my gainings. I don't like this. So just a few more ticks and I will be done for today. We are talking about this high. We are slightly above it. Let's move this stop even closer. That's done. All right, good trade. It was a bit stressful at first. If Nasdaq was planning to go and take this high, it shouldn't have stopped here. It must have enough force to rip above this and then tap into this. This could result in another exhaustion and another dip to the point of control. Moved my stop loss aggressively to the higher. As you know, in my stream and in my tape reading, I teach that once we have new candles, once we have new uh, data on volume profile, our judgment should also shift and change based on the new data on the chart. Let's look at our cumulative volume delta. What do we have here? So the price made a new high. That's the high in here. But the cumulative volume delta did not make a new high. It was a good decision for me to exit this trade because the price went up with a very thin volume, a low volume that could be indicate a manipulation exists in the current uptick in momentum to lure and to trap bulls. Let's look at our daily stats for now. Here our daily statistics. It's April 20. We closed the day with $5,395. That's $5,397. 7 trades, 100% win rate. The trades I took during the PM session, they were kind of risky. I don't suggest people to trade during lunch hours, but the structure was very vivid. If you guys have time, give me 2 more minutes to go through these trades and to have a summary. Here first, we have the 5-minute chart. I used the VWAP. I anchored this VWAP to this low. Why this low? Because when I anchored this VWAP to other lows, those support levels were already invalidated. This was the only support that was fresh and close to the price that hasn't been touched yet. After it touched the price, I saw a rejection. I went to lower time frames, which is 1 minute. Then based on my strategy, before I go long, I want to see, do we have aggressive sellers? Because if we have aggressive sellers, we have retail or smaller institutions that might be trapped in that short position, which we have here. The high of these 5 consecutive sell orders is here. So after this candle, which was close above it, look at the volume. With a significant volume, that's the breakup structure. Now I have a shift, and that shift left a gap, a liquidity void, as you can see on the chart right here. So I have used and utilized this liquidity void to target short-term highs. Bought here, closed here. Then again, bought here, closed there. Before the PM session starts, I saw one dodgy candle that took these highs, sign a fair value gap that was occurred earlier in the morning session. After this dodgy, I see, okay, the institutions have done the damage. Let's have a sell in here at the mean threshold of the gap. This one. Look at the selling pressure. We have a ton of volume in here. That means we do have aggressive sellers or institutions who are willing to sell at this price. They sold again. I was relying on 1 p.m. because at 1 p.m. we do have one liquidity sweep. We did the high. 1 p.m. we swept these equal lows. I have a tail. I have a point of control, and I have that structure, that bullish structure, which has been building the entire PM session and lunch session. So I went long on these prices. Since this high came so close to this one, why not again and close all of them at this high? And during New York session, I am live streaming on my channel. Thank you for watching. Stay safe, stay observant, and I will see you in the next episode.